Welcome to Aha Math and Science. Well, it's time for weekly summary. So a lot has happened in the past week. And on past Monday, the big news is that JP Morgan Chase took over First Republic Bank. And in the interview, Jamie Dimon said this part of the crisis is over. That kind of made me to wonder what are the other parts of the crisis that are not over? And actually, this question was already answered by Jeremy Grantham in an interview that he did on April 13th. And he said, other things will break. And actually, who knows what they will be? This really kind of a point speaks about the essence of the market. That is, things that we already know are already priced in the market. And it's really the things that we do not know that actually moves the market. So this really kind of like tells that we sometimes we just need we just really cannot predict what will happen in the next day, and these surprises are usually actually that can move the market. So on the economic front, in addition to the big decision by the Federal Reserve on Wednesday, we also got the manufacturing PMI report on Monday, and then the employment report on Friday. So on Monday, the manufacturing PMI index stood at 47.1%. That's the data for April 2023. So this actually kind of marked the manufacturing PMI was in contraction for 6 consecutive months. So pretty much every kind of subcomponents of this index is kind of contracting. New orders contracting, supply backlogs contracting, raw materials inventory contracting, exports, imports contracting. The only thing that looks like slightly positive are the consumers' inventories are building, but they are actually increasing too much, too high, and then the price is actually increasing again. So these are kind of short-term good, but not necessarily long-term good. Both the price increasing and the inventories are too high. So this is really definitely not a good news on the manufacturing PMI. Now on Friday, we actually we got a positive kind of surprise for the employment report. So the non-farm payroll increased by 253,000 in April, and the unemployment rate changed very little at 3.4%. So 3.4% kind of marked another. It's actually kind of at the same level as the low that it was in January of 2023. So the unemployment rate was still really kind of low. And so it really kind of tells actually the labor market is very tight. So really we can see that from the Monday, the manufacturing PMI report, and the Friday, this labor report, you can see that we have this mixed bag of information. These are kind of like something really also make investing in the stock market kind of difficult. So we have this kind of really contradictory news on the economic side, and the same thing actually was also kind of happening on the market side. So for the week, you can see that pretty much Nasdaq Composite was kind of increased for less than 0.1%, but SP 500 and the Russell were in the red. And then on Friday, you can see major indices all kind of rebounded sharply up for around like 2%, and VIX correspondingly kind of dropped more than 10%. But for the week, actually the VIX jumped almost like 9%, and so the major indices did not really kind of move much, yet the VIX actually jumped a lot. This really kind of says something about maybe the market is kind of really in this topping process. When the indices did not really change much, yet the VIX actually jumped. And now this kind of divergence between actually both the volatility index, VIX, and the major indices, usually kind of contains information about what will happen next for the market. So now let's also take a look at this divergence between these different major indices. And Actually, almost like 2 weeks ago, we point out that the Dow Jones Transportation Average made a new low, a close low that is lower than the March low. And at the same time, Nasdaq was very strong, making highs. That's one divergence. And we also point out that the divergence between Nasdaq and the Russell 2000. And in fact, very surprising, we can see there's something big kind of happening to the Russell 2000. On last Thursday, the Russell 2000 actually made a new low. That low is even lower than the March low and lower than the December 2022 low. So that's the lowest close since October 20 of 2022. And at the same time, the Nasdaq was actually making new highs. A new high that is now highest close since September of 12th. So since September 12th of last year, this is kind of the highest close for Nasdaq. So this huge divergence between the big technology companies and then this small cap company, really kind of says this huge kind of divergence kind of in the market internal. And so usually this kind of huge divergence, especially between the Nasdaq and the Russell 2000, was kind of resolved by either both indices will make new highs or both indices will make new lows. Now, in the current environment, we are kind of still in this bear market. We think that it's more likely that both indices will make new lows. And then coupled with the transportation average was actually make a new low and then rebounded with this kind of make a new low in 2 lag bars and then rebounded to almost kind of recoup 70% of the ground lost here in these 2 lag bars. It's actually not uncommon at all. And usually when this happens, it also says in something bad, about the market in the coming weeks. And I discussed this in another video already. So this is really the huge divergence between the different indices. And now let's take a look at the VIX. So VIX jumped for last week. Initially, actually jumped a lot higher. Then on Friday, it also closed in the red. But for the whole week, it was actually increased from a level that is like a week before. It had the lowest close, almost like for more than a year, at 15.78, and that was actually lower than the January low for the VIX, and it's just kind of slight above the 15.01, which was made on October 21st of 2021. So now, if the VIX was able to hold it like this and start even go up, and did not make a new low lower than the 15.78, that's usually a very strong kind of indication that the market already kind of topped. So this is something we definitely need to kind of keep an eye on. Now let's look at the trend analysis by looking at both the SPY and the QQQ. The SPY is the ETF for the S&P 500. As you can see, when we perform the trend analysis, plotting the price on the log scale and fit the data using regression analysis, we can see this clear downward trend line. And the 2 pink lines are the 2 standard deviation above and the 2 standard deviation below the trend line, downward trend line. You can see that whenever like when below it, it quickly rebound. When below it, it quickly rebound. When below it, quickly rebound. And here now it's kind of started getting close. We don't know if this is kind of the high that it made a week before. And then this is just last Friday. You can see last Friday is lower than a week ago. So could it kind of make another attempt to go to the 2 sigma trend line? Maybe. Or maybe it could have just kind of, here is already the top instead of go down. We really don't know. This trend analysis does not need to provide information to determine what will happen to the market. It only tells that if it's once kind of like get too close to 2 sigma trend line, it will not stay there for too long and start to kind of come down. So in either case, we think it will not be really kind of too far away from the topping, or maybe it's already topped. So we just need to kind of continue to observe what will happen next. On the other hand, the QQQ was actually a lot stronger, and it did kind of broke above the 2 sigma trend line. That was like 1 week ago, and then in the past week, the beginning part of the week, from Monday to Thursday, it dropped within the trend line. So it went below the 2 sigma trend line. And now it did another attempt and it actually broke above the 2 sigma trend line on last Friday. So what happened next? Could it kind of continue to move high a little bit? maybe could it kind of start come back down? It's also possible. So at this point, the only thing we know is it's not going to be stay above or around the 2 sigma trend line for too long. Eventually, it's going to come down, and usually that should not happen. Kind of like to take too long time for this to happen. So this is what we kind of look at the information we got, kind of look at the fundamentals and look at some of the major indices. Kind of to summarize, we see this mixed bag of information on the fundamentals, and many things are kind of deteriorating. Yet the labor market is very tight and shows like a lot of resilience. And on the major index side, we see that the big technology companies are showing really a lot of strength. Yet the last 2000 was really kind of weak, and this kind of huge divergence really also perhaps is a reflection of the divergence among the economic indicators. So in this kind of environment, we really need to be kind of cautious, and always note that the market sometimes can stay irrational for an extended period of time. So we need to really kind of keep an eye on, and it also makes kind of trading in this market very tricky. So, but we have to kind of maintain this sense of caution, and for what's really kind of going on after we analyzing the internals of this market. So I hope you have found this video kind of interesting, and find the information presented here give you some additional information to think about it. And again, your support really kind of means a lot to this channel, and so give me the motivation to continue make videos like this one. So please do not forget to click the like button and also to subscribe to our channel. And thank you for watching.